Good afternoon, ladies and gentlemen, and welcome to the ADEPT Technology Group PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time. Just simply type in your question and press send. The company may not be in a position to answer every question it receives today. However, the company will review all questions submitted and, where appropriate, publish responses. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to John Swathe, CFO, and Phil Race, CEO from ADEPT Technology. Good afternoon.
Good afternoon. Thank you for the introduction, Mark, and welcome to the ADEPT Investor Briefing covering our interims of H1 FY22. As Mark explained, it's myself and John, the CFO of ADEPT, on the call, and absolutely ask as many questions as you like. It's a shame these things aren't face to face, but as they are virtual, then let's answer any questions you might have. We've tried to give a full and thorough briefing here in the RNS statement we issued today, but I'm sure there'll be some questions that we haven't covered, and we're happy to field them. So for those who don't know ADEPT, I want to just cover the business, and we've very much I almost say completed the shift to becoming a full service managed service provider focusing on the cloud, and that's a big theme for us. With the calls and lines part of the business, which was the origins of the company, is now circa 12% of the business, so a very small proportion now, and cloud is very much where we're spending all of our attention. So you'll hear a lot of conversation around cloud-centric strategic services and what we're doing there. So what's our mission? I always think when you're employing 340 people, which we now do, it's really important that we have a rallying cry. And what do we do as a company? What difference do we make to the outside world? And our mission is uniting technology and inspiring people. And what we mean by that is this world is converging. If you think about your exposure to communication and technology and networking, that they are all now digital as opposed to analog. And as a result of that, the services that we're providing are uniting and interacting with each other. So we're solving that problem for customers. We're uniting their technologies and serving them in as straightforward a way as possible. And inspiring people, we see that in two ways. One is inspiring our customers, so we're energetic and enthusiastic and solving problems for customers, but also it's really important that we inspire our 340 people in the business to provide a great service. So that's where inspiring people comes from. And we talk about navigating the storm of innovation. There's so much going on, and we're at that fulcrum between customers who are looking for a full integrated service in a seamless way, and technology providers that are constantly knocking on our door asking us to resell their services. So our challenge is to identify those technologies that are very much in demand and in growing markets. And our SD-WAN experience with Datrix, and we'll cover that later, is a great example of that, where that marketplace is moving very fast. There's a lot of growth, and we've managed to acquire the skills and expertise to be able to deliver that service to customers across the UK and also in Europe. And it's really important that we learn, adapt and change. This is a constantly changing market. We've seen over the last 18 months the massive rise of Microsoft Teams as a way of communicating. And it's really important that we tap into that and we adapt our business to seize the opportunity. And we've seen some great examples of that. I mean, for example, over the last 2 quarters, the Microsoft Cloud aspect of our business has increased by over 40%. So, we've seen these growth areas, and it's important that we tap into that. Keep the questions coming. I'm loving a couple of them already, so I'm looking forward to addressing them. So why should you invest in ADEPT shares? Well, this is our hypothesis. The UK market is huge. I'll come to some data later, but we've got several million customers we can engage with. There's a whole challenge of addressing the technology requirements of a large market, and also there's opportunities to consolidate the market in terms of acquisitions. Increasingly, as I say, customers are looking for a full service, and therefore you need to have the full range of skills within your business to deliver that service. And therefore those small organizations that are out there as targets, they can't provide that service, and they need to be part of a larger organization. And that's our hypothesis in terms of consolidation. And we can bring new skills to their customers and also take out some costs as part of that journey. We are in a technology marketplace that continues to grow, and we are focusing on that cloud space, which is growing at 5% compound in the spaces that we can address. So we very much attach ourselves to tailwinds in the technology space. We have some great customer credentials. We'll come on to some logos later, but in all of the aspects of the service we deliver, we can point to great references with very happy customers. Recent ones, we can talk about Public Health England, we can talk about Nhs Electrical and a European deployment of SD-WAN. We've done some great work with a charity called Selwood Housing, where we've deployed a secure network for 400 employees across 19 different locations. We've done a great project for the TUC, who are now a reference. So we have some phenomenal customer credentials. Cambridge University, the Houses of Parliament, they trip off the tongue. We've also focused on particular verticals with great success in education, where we service some 4,000 schools, and that's in a market of 27,000 schools. So we have excellent strength in that space, and we also have delivered some great projects in the NHS and the care sector, and that I think will be our next vertical. There's some work we're doing, but that feels like where we're going to see our next major emphasis. We have this lovely mix of about 50% public-private, so we capture opportunities from both those marketplaces. We've had a clear strategy over the last 3 years, so we've been very much focused on putting a consistent operating platform in across the business using off-the-shelf tooling. We're at the end of that journey. 95% of the staff are using that platform. And what does that mean? Right, there's a so what question on that one. And what it means is that we can move work around the group. So I can field a call in our office in Dorking, and if that client requires particular expertise that's located in Doncaster, I can move that call in a very straightforward way and provide an excellent service for customer, and also become operationally efficient because we're using the right skills in the right locations. But the other thing that one ADEPT platform gives us is great business insight. So we can see how the first line teams are performing. We can see how they're using the experts within the business. We can look at how long customers are waiting to be serviced. We can look at the sales pipeline. We can understand the opportunities that are flowing through the business. So we get tremendous business insight, which helps us make great decisions as the executive of the business. And finally, financial discipline. We are very careful with the cash that we spend. We have very clear targets. We're really focused on organic evolution. We spend our money very wisely in terms of capex, and we have this ruthless focus on recurring revenue. It's really important that we can have a stable future, and we achieve that stable future through a focus on recurring revenue as opposed to just the one-off parts of businesses. So I hope that gives you a good sense as to why we think we're a share worth investing in. Okay, I'll hand over to John just to cover the financial highlights from the first half.
Thank you, Phil. Yeah, these are the financial highlights. We've seen growth organically and inorganically. We did the acquisition of Datrix on the 1st of April, so it's had a full 6-month contribution, and that's the primary driver behind the 20% increase in top line revenue to 34.3 million. Within that 20% growth in revenue, we're pleased to see that we've got an increase in the cloud-centric services revenue up to 14.6 million. That's a 19% uplift, partially coming from the Datrix acquisition, which added 13%, but we've got a 6% organic growth in that part of the business, and that piece now accounts for 42% of the overall business. Sustained margin as well, the focus on Ebitda, growth 16%, up to 5.7 million for the half year. All falling through to adjusted profit after tax, also up an equally pleasing 16% to 3.5 million, with that Ebitda margin being maintained at 17% against the prior year, 17%. So that focus on managed services continues within the business. We're up to nearly 90% now of revenue coming from managed services, with the fixed line legacy part now accounting for 13%. So that continued transition between a fixed line business to a managed service provider, we're a long way through that timeline now. The 16% increase to adjusted profit after tax flows through at a higher level at the adjusted EPS, which is 30% up, and that's partly because the Datrix acquisition came with some accumulated tax losses, which we've been using in the first half and will continue to use in the second half. As Phil said, we're still very much focused on cash conversion, looking after the cash. And so the reported EBITDA to operating cash conversion after tax, 83%, which is well within our normal range. And we continue to be a very strong cash generator, able to support the debt that's in the business. I'll pass back over to you, Phil, for the operational highlights.
So we think a very pleasing set of financial results. So I said right at the outset that we're a consolidator. We've acquired multiple companies, and it's really important that we make those work. We announced in April the acquisition of Datrix to, we quite rightly classified that as a game-changing acquisition in terms of the scale of the business, the fact that it brought new technology expertise in SD-WAN, which is a new technology trend in the marketplace, and a collection of customers particularly focused on the health sector, which really supported us in our move in that space. So, very important that that acquisition works, and delighted to report that we're ahead on the financial performance of that business. So they're delivering on the promise they made during the sale process. We've fully integrated them, so we've moved that entire business onto our operating platform. So we're getting insight from that operation already, and they can be part of that moving work around the business theme. So fully integrated ahead of plan, and we achieved the synergy. So there were certain cost savings that we'd set out at the outset, and they've achieved those. And they're winning. One of the questions we have of, we've got any major wins that we can talk about? Well, Nhs England and Nhs Electrical are two that were achieved by Datrix alone. So Nhs England are building or occupying a new building, and they're part of the UK Health Security Agency initiative, and we've fitted out the network in that entire building. The contract value circa £500,000, so very substantial for us. And Nhs Electrical, another great example where, and if you think about this world we're living in, a whole range of offices across Europe, an on-site and remote workforce, and they all require connecting in a high performance and secure way. And we've deployed that, a lot of that being done remotely, where we ship effectively a box to site and we configure it all remotely. But equally, we can now manage that through what we call a single pane of glass. So we can elegantly manage the traffic through that entire network and make sure they're performing optimally. So a great example of a Europe-wide rollout of SD-WAN for a customer of Datrix. So yes, we have been winning some substantial contracts, and they're two good examples. All research suggests that service is one of the most important factors in both winning and retaining customers. And so great to see us winning the Managed Service Provider of the Year award at the Comms Business event earlier this year. And seeing that Net Promoter Score, so Net Promoter Score plus 59 from our top customers, we think that's almost class leading. I haven't got the evidence, but it wouldn't surprise me if that was class leading in our sector. And crucial, it's really important that we deliver that superb service. And we continually adapt. So ADEPT Nebula is a solution that we invest in, and that provides a whole range of services. It's a hybrid cloud platform, so it helps people move to the cloud, but we manage it for them rather than passing it across to the likes of AWS or Azure. And we've seen revenues from that part of the business increased by 26%. So again, that investment is getting a return and showing growth. We've seen a growth in the voice over IP revenues. Again, if you think about what we're doing here, we're having a conversation, we're presenting, all done digitally, not on an analog service, and that voice over IP is all part of that. So seeing that revenue grow, it reflects industry trend. And we've also adapted our proposition in education. It's a small product, but we've had some good success with it already, which allows schools to synchronize information from their management information systems and the cloud platforms they're using to support pupils. So that synchronization is a bit painful and costs time and effort. And we've got this utility that we've rolled out, and we've already sold that over 20 times across the UK. So we're continuing to adapt and evolve and invest and seeing a return from that. So for those who haven't come across ADEPT before, here's a collection of slides really setting out our thesis, and use some of these in introductions when we're presenting to customers. So there's some mega growth trends in the marketplace that you'd have seen if you open the paper today. I'm sure some of these will be talked about. So the move to digital Britain, this massive demand for high-speed networks. Don't talk to me about HS2. I think that investing in high-speed networks would be a far better use of money, but I don't want to sort of stray into politics on this call. But that whole point about digital Britain and making sure that everybody in the UK can interact digitally with various services, a massive thing. The working from home agenda, this dramatic change of working practices, being able to provide services, being able to present all of your internal systems to people working from home, but doing it in a secure way. And this is the crucial thing, doing it in a secure way and in a way that performs is a significant trend. Then shifting to technology as a service. If you go back over many years, it would have been a server in a data room in an office with a hardwired connection to a desktop in an office. That world is very much shifting, and increasingly people are looking for a web engagement and everything done as a service. So whether that's LAN as a service or wide area network as a service or infrastructure as a service, there's a whole theme about breaking down the requirement into a collection of services that are then integrated by people like us. Then there's the BT switch off of the copper network. If you haven't been contacted by BT yet, you can guarantee you'll be contacted this year, if not next. That copper wire that's coming into your house and carrying your telephone signal, that is going to disappear. That costly network that breaks down and is unreliable is now disappearing. And BT and through people like ourselves will be replacing that with an internet connection, typically over fiber, which will then give you a high speed and far more reliable service. And that switch off is going to happen by 2025, and that's why we're seeing the decline in calls and lines, but the increase in the VoIP revenues. And that switch and that transition is an opportunity for us to seize new revenues from new clients. And then the final piece is that security piece. That whole this whole world of IT is constantly under attack from bad actors. I'm constantly getting emails from people trying to get me to connect through a hyperlink to their services, and you can guarantee that some of those are fraudulent attacks. So providing a secure wrapper around all of these digital services is a key need, and we've seen. We do authentication for Microsoft as an example, where we provide two-factor authentication. So you're sent a key and use that key to access systems. We've seen that authentication usage among ADEPT customers increase in the last month alone by 62%. So this whole demand for cybersecurity is ever increasing in this sort of this arms race between the bad actors and the technology providers that we deliver to customers. So given that landscape, what do we then take to customers? And if there's one slide that I asked my sales team to present to customers, it's this one, because it just explains what we do. If you're in a building, we can point to all sorts of technology in that building, and we can provide that entire service. And what customers are looking for is it's the simplification of this entire world. So please deliver this service, deliver it as a service, wrap all of this requirement, and just deliver me one bill and one way of managing it. And that's what we're delivering. So the range of capability we're now bringing to our customers is unheralded, and we have expertise in this and great partnerships that allow us to deliver this. So that's the range of services. But as an investor, what's important is the fact that the total addressable market, and this is from work done by Ernst & Young, is 11.4 billion. This is just in the UK alone. So this is at the addressable market that we can obtain. And at the moment, in this year's results, we are scratching the surface of that 11.4 billion. And it's also important, as I say, to be part of a market where there's a tailwind, where there's a natural growth. And in the cloud-centric strategic services space that we are focusing our attention on, there's a compound growth rate of 5% over the next 5 years. So we're attaching ourselves to markets where there's growth. And if you think about security and SD-WAN that we provide as part of that portfolio, the growth rates there are even greater than that natural growth rate. So talk about private sector, public sector. For us, the doors are open into both those marketplaces. So we're on a number of public sector frameworks, and you have to win a position on those frameworks. You're not granted that as a free throw of the dice. We have to earn the right to win business in public sector, and we're on 13 different frameworks now. So the doors are open to opportunities from that space, and obviously we attack the commercial marketplace as well. So you can see that natural and nice blend between the two arenas. And this is some of the customers. So I talk about that ability to point to references and refer to some great projects. Here's a collection of just some of the references that we can talk to. Whether that's a whole range of acute NHS trusts that we've provided high-speed connections to, whether that's another great example. There's a bit of a green credentials piece here. Community Health Partnership, which is a property manager. They were looking to move to a zero carbon estate, and what they've done is connected or installed a collection of sensors across the building and bring information back through networks that we manage into a central place, so they can look at heat, light, energy consumption across their entire building estate to drive down their energy costs. So there's a zero carbon theme there, but it's also reducing the cost of running their estate. So another, just great example of some of the references that we can play into our prospects. We provide connectivity and communication to the Cabinet Office. We do some great work with Kingsley Napley, which is a legal firm. So you can see we have a whole range of customers that we can point to. Here's some statistics. I won't go into a huge amount of detail here, but again, credentials are important when people are selecting organisations to provide them with a critical service. And when TUC were looking to adopt a new provider of IT for their entire workforce, it was crucial that we could share great evidence, great examples, good case studies, commendations, as part of that tender process. And some of this data sort of evidence is that we actually know what we're talking about. We have great experience and expertise. We won't let them down either now or in the future. And that reassurance comes from some of the data on this slide and the previous one about customers. But as I say, I can't stress enough, providing exceptional service is the crucial part of the jigsaw. And again, Yorkshire Wildlife Park, superb case study for us. They're putting in a new business park, a new hotel. And we are, as part of that project, providing full infrastructure and IT provision as that park expands. And I had a great phrase in some communication from their CIO, and it said that the partnership we've developed with ADEPT is exceptional. And when you hear that sort of feedback, it shows that we know what we're doing. We do it brilliantly, and we get great feedback from customers. And that's what we wake up for every day as a business. So how we do it? So we talk about being CapEx light. So we very much focus on where we can add value, where we can glue together the different components and bring them to life using our expertise. And we lean on the investment from third parties. So it's really important we have great relationships with those third parties. And here's a collection of these third parties. We interact with them well. We understand the innovation that's coming from those partners, and we then deliver it to the outside world. But it's also really important that we spot gaps. So as a result of engaging with our clients, we identify, well, there's a need out in the marketplace. We've spotted this need. Let's go find a potential partner that can address that need. And we've been doing that during the last 6 months and beyond. 8x8 is one recent engagement. We signed a strategic partnership with them in July 2020, and we've now got over 20 new wins as a result of the partnership that we've struck with 8x8. So a great example where we need to be agile, we need to listen to the market, we need to adapt our portfolio, engage with a suitable partner, and then execute on the promise. And 8x8 is just a great example where we've done that with some great case studies now in the bank. We talk about Nebula, and Nebula, I sort of think of Nebula as a charm bracelet on which we've hung some charms. And the charm bracelet is the 3-node network, a resilient network that we deliver to customers, so people can connect to that and get the best price network and the best service network from a number of different potential providers, whether that's TalkTalk or Virgin Media or BT. And the like. So we provide a sort of network aggregation service through that Nebula infrastructure. But as importantly, we can hang off that charm bracelet services. So, for example, voice services. So we've done brilliantly with Nebula Voice. We've taken a third-party voice platform, we host it, and we now sell that as part of Nebula. We've now got over 2,000 seats on the Nebula Voice platform. We provide backup services within a Nebula platform. We provide hosted Sage and school management information system solutions. So we've hung these charms off the back of this charm bracelet, and we're delivering that in an elegant way to customers. And as a result of that, we're making good strides in terms of growing that part of the business. I won't labour the point here, but it's been a major theme for us internally over the last 3 years, and we are getting that great operational insight. I've spoken to various people, and I would love to do sort of like a hosted demonstration of what we've achieved with these platforms, just to demonstrate how seamlessly integrated they are and how much great information we now get from our business. Apologies, I'm losing my voice. As a result of the Datrix acquisition, we've grown our staff presence now to 340 individuals. John, can you take over? I need to have a glass of water. So otherwise, I'm going to die, I think. Over to you.
Yeah, of course. So as a result of the Datrix acquisition, we're now up to 340 employees, operating in a number of sort of nationwide locations, principally across southeast London and central England. We've got these points of presence are geographical hubs with centres of excellence for various different parts of the product portfolio that we're offering, and they tend to service those the local customer base. But now that we've got that Project Fusion platform rolled out across all of these sites, then it means that we can move the workload between the sites. So it means we can improve our efficiency.
Thanks, John. I can step back in if you like.
Yeah, you can take back over if you've got the voice for it.
Thank you very much. So I dropped this slide in. This was a slide, it was the exact same slide as we shared when we announced the acquisition of Datrix. And sort of setting out why we felt it was a game changer. Their presence in the health and public sector, their good engagement with the acute NHS trusts, the expansion of the capability, the introduction of additional partners, the strong financial metrics, and that has very much been the case. They've delivered on the promise, and just to reinforce what I said at the beginning of this presentation, they're fully integrated. They've executed on the synergies. They're ahead of their financial plan. We've already done some cross-selling between Datrix and the ADEPT business. They've renewed the key contracts that we set out as part of the acquisition. They've had success with major projects, and during the course of H2, we'll be evolving their Datrix brand to ADEPT over the coming months. So very much lots of green ticks against the entire Datrix plan, which I'm incredibly proud of. Okay, John, if I can hand over to you just to go through the details on the finances.
Yep, thanks, Phil. So these are the financial highlights from the first half to September 2021. Full 6 months revenue contribution from the Datrix acquisition has driven most of the 20% increase in top line revenue up to 34 million. We still maintain that strong recurring revenue stance in the business. It was no different when we were looking at the Datrix acquisition. It was one of the criteria we look for in acquisition targets. So still just under 3/4 of the revenue coming from recurring products and services. Growth in the managed service part of the business, 26% up to 29.5 million. So that now represents just under 90% of the total revenue stream, with the balance sitting in the fixed line piece. Within the managed service piece, the piece we're really focused on is growing that cloud-centric strategic services revenue. It's up 19% overall to 14.6 million. And that's broken down 6% organic and 13% coming through from the Datrix acquisition. And overall, that piece of the business now is 42% of the total revenue stream. So with 42% of the revenue stream growing at 6% organically, we're sort of swimming with the tide there. We've seen a 16% increase to the underlying Ebitda up to 5.7 million, maintaining that Ebitda margin at 17%. The Datrix acquisition coming in had a broadly similar Ebitda margin, which is why it's broadly flat year on year. EPS is up 30% to 13.2 for the half year. That's bigger than the 16% uplift to the adjusted profit after tax, primarily as a result of the Datrix tax losses that came with the acquisition being used up in that first half, and we'll continue to use those in the second half. So I would expect to see a similar trend in the second half. We continue to be very focused on cash flow, cash generation. We are a capex light model. Capex is under 2% of revenue. The reported Ebitda to post-tax cash flow is 83% conversion rate, which is well within our normal target. The prior year comparative there at 150% was kind of exceptional. It had some deferral of the Q1 VAT in it, which was repaid to HMRC in Q4 last year. We continue to be focused on customer credit collection. When COVID hit, we really did focus on that, weekly reviews on our aged debt buckets, and pleasing to see that the credit collection days have improved down to 39 days as at 30th of September. In the period, we have used 9 million of cash to fund that Datrix acquisition, which continues to deliver, and we are expecting to pay an earn-out on the acquisition, which will be most likely after the March 2022 year end. Net senior debt at period end was 31.2 million compared to the 50 million of available facilities. So we've got plenty of headroom within the facility. The increase on the prior period primarily driven through the 9 million of cash we've used to fund the Datrix acquisition. I won't labour too much on these operational highlights because Phil's pulled out a number of them. You know, for example, winning the managed service provider of the year. But some good pieces to note are the 26% increase to the ADEPT Nebula revenue, proving that making that investment in that piece of infrastructure has been worthwhile. We've got now more than 600 customers on the platform, and it's delivering just over 1.5 million of annualized revenue currently. So pleased to see that piece of the business is growing, and we expect it to grow in future. Voice over IP, the transition of customers away from that traditional telephony continues. We've seen a 54% increase in voice over IP revenues, up to 1.9 million for the first half, which is also a result of that the success of the 8x8 proposition that Phil alluded to earlier, bringing them on as sort of a key partner for us in that part of the group. Revenue from public sector continues to be what we see as a strength of the business, because it gives us exposure to both commercial and public sector. So it gives us a nice bit of stability within the customer base. Public sector customer revenue is now 48%, up from the prior period, partly a result of organic wins within that piece, but also the Datrix customer base contained a number of public sector and NHS customers. I'll move on. So moving on into revenue with just a little bit more detail. Within that 20% increase in revenue, the managed service part of the revenue up 6% organically, 19% overall, driven by the growth in cloud services, the voice over IP that I alluded to earlier, and also support services. One-off revenues up 1% organically, but 36% overall, primarily driven through the acquisition of Datrix, which has a number of one-off revenue streams within it. We have seen some supply chain impact from the global chip shortage, meaning that we have a number of booked orders, signed orders from customers, but we've been unable to get the kit in the normal delivery lead times. So we're hoping that will ease within the second half. We're expecting to deliver that 500,000 of kit that was withheld from the first half in the second half, assuming we can get back to a sort of normalised supply chain. In addition, we've seen some customer resource constraints for a number of reasons, recruitment issues, but also COVID impact within their own employee base, meaning we haven't been able to get in to deliver some of the projects, and that's seen a deferral of about 400,000 of professional services products that would have been delivered in H1 and we're expecting to deliver in H2. The fixed line piece of the business continues to sort of decline at the market rate. It's 18% down year on year. That was an accelerated rate last year, and it's continued largely from business call volume reductions, and we haven't seen any of that real return to demand in H1, given that the COVID lockdown easing was pretty much at the back end of H1, so we may see some recovery in the second half. We continue to have that strong revenue visibility, 74% of revenue coming from recurring products and services, and also that customer stability with 48% in public sector and healthcare. So here's a breakdown of how we look at the business in terms of the 4 key product sets. The one we really focus on is that cloud-centric services part, 14.6 million coming from that segment of the business, which has got 6% organic growth in it, along with the 54% growth in cloud and IP telephony. We've got 12% growth in the data connectivity as well, which is 8 million of that 14.6. So it's a strong and growing part of the business. That support services has grown by 45% in the period. That's all driven through acquisition growth on Datrix, and actually year on year the underlying support revenue has been flat. We've seen a number of customers who have been delaying decisions on putting in place new long-term support service contracts. So the winning of new support contracts in there has been quite challenging, but it also means the retention rate for us of our existing support services contracts has been fairly strong. Technology products is hardware and software supplies, and that has increased by 10% year on year. We have seen an increase in confidence of people ordering new kit. The challenge for us has been actually getting hold of the kit. We've been doing what we can to try and manage that through our network of partners, and in some cases pre-ordering kit for future projects. The fixed line telephony piece is now down to 4.5 million of the group, so it's 13% of total revenue. So it continues to reduce, and we'll continue to use the cash from that to reinvest in sales and marketing to grow the rest of the group. Ebitda has seen a 16% increase. Within that, we've seen the managed service part of the group increase by 32%, up to 5 million out of the 5.7. And if we look at that, it's 26% acquisitive growth from Datrix and 6% organic growth from the growth in that cloud-centric services and also the technology products. The fixed line contribution is at Ebitda level, 700,000. We've seen reductions in the higher margin part of the fixed line piece and the core volume reductions. In the first half this year compared to the first half last year, we have seen an increase in operating costs, partly as a result of a return back to some normality post-COVID. So within the employee base, we have seen an increase in travel. We've put more money into marketing and also recruitment of new heads. So we're getting back to a more normalised position. Despite that, 17% Ebitda margin has been maintained, and between the managed service and fixed line parts of the business, broadly similar margins, slightly increased on managed services. In terms of cash flow and funding, period end senior debt 31.1 million. On top of that, we have the 7.3 million convertible loan, which is on the balance sheet. We've used the bank facility that was put in place in March to fund the acquisition of Datrix. That was a 9 million cash outflow, and principally that's how you see the increase in the debt from the 25.8 million at March up to 31 at September, less the organic cash flow we've generated in the period. So cash conversion rate 83%, continuing to focus, as I said, on customer credit collection. Free cash flow yield is 7% on an unlevered basis and 9% on a levered basis. Continue to be CapEx light, with 2% of revenue being spent on CapEx. The projects we've particularly invested on the period are we spent about 100k, which was customer demand led on the ADEPT Nebula platform to increase capacity, and we've invested a further 300k in the One ADEPT platform, which is principally the integration of the Datrix business into the rest of the group platform. Debt facility, a 50 million debt facility, so still plenty of cash availability compared to the senior debt position of 31 million at half year. And in terms of leverage, we've seen a slight uptick from 2.6 to 2.7 times between March and September. That's as a result of the 9 million we've spent out on the Datrix acquisition, and it's less the organic cash flow we generated in the first half.
So yeah, so in summary, we think we're proud of these results. I mean, we still have the overhang of COVID. It's still there. It's still present. Yet, despite that challenge, we've grown organically to a decent level, and inorganically as a result of the Datrix acquisition. So we're very proud of the growth story here. And also we've managed to maintain margin, so 70% margin both prior year and this year. So achieving growth and achieving sustained margin, great indicators of a business doing the right thing. I think we've achieved our strategic objectives, or we continue to achieve, in terms of the integrated platform, consolidating the market, doing the right thing in terms of customer satisfaction, and getting awards is just a consequence of all of that, and winning projects are probably the most important thing. We're a consolidator, so seeing the success of the acquisition of Datrix acquired in April, and seeing the the consequence of that acquisition, both in new customer wins, good customer feedback, the ability to cross-sell, and the ability to evolve the business with a new proposition. Great example of the strategy in action. We are ruthlessly focused on service and putting platforms in place and training and educating our staff to do the right thing. And we're seeing that in terms of the NPS scores. And at the end of the day, if you have well serviced and well looked after customers with great NPS scores and a highly motivated workforce and a great collection of propositions that you can take to them, then you won't have you've got all the ingredients of having a successful business. And I think we focus on those areas with tremendous success. And we're continually adapting. It's really important in this space. Technology is constantly evolving. So it's absolutely crucial that we listen to our customers, understand what's going on in the marketplace, and adapt our portfolio to address that. And some great examples of that. One great example of that is Surgery Connect. So doctor surgeries, we have a great presence in doctor surgeries, and they're increasingly looking to do video calls with their patients. And we've identified a communication solution where they start off with a telephone call and they can flip that seamlessly to a video call, and then record all of that in a disciplined way that supports the needs of the Care Quality Commission. We identified that need. We identified a partner called Exxon. We've launched a product called Surgery Connect, and we've already sold that solution out into the marketplace. So just another great example where we're listening, identifying partners, adapting and delivering for both our customers and to our investors. And in terms of outlook, I think momentum continues. We're seeing a rise in our pipeline, so that's the key indicator in terms of momentum. So the pipeline is growing. It was frustrating seeing that revenue deferred from H1 into H2, and not in substantial sums. So that gives us confidence in terms of delivering the H2 number. And we continue to play in a marketplace worth 11 billion in the UK alone that we can address. We're scratching the surface, so the opportunities are going to continue to be there. And as long as we provide a great service with a great product portfolio with great people, then we've got a chance of being successful. So that's the sort of summary of the business.
That's great. Let me just jump in for you for a second, Phil. Thank you very much indeed to both Phil and John for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review the questions you've submitted today, I'd like to remind you that a recording of this presentation, along with the copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. We will send you an email when they're ready for your review. I'd also like to remind you that your feedback is important to the company, and when this presentation's ended, we'll redirect you to a feedback page so you can let the company have your thoughts and expectations. Phil, John, that's no time at all to look at the questions, but anyway, that's my best attempt at it. If I could ask you just to open up the Q&A tab on the right-hand corner of the screen, and if I could ask you to read out the questions and where appropriate, give a response, and then I'll pick up from you at the end.
Okay, so John, if I can ask you to sort of pick up the questions from Scott, but if I start off and think about those. A few sort of towards the end. Let me think. Profitability by business segment, as a question from Mazan. He's effectively looking at our profitability, and he's questioning whether we get better profitability from, say, the education or public sector compared to the private sector. No, it is very consistent across the different markets and the different solutions we provide. We very much focus on our margin. Our salespeople are focused on margin and are paid on a percentage of gross margin. So our whole engine, if you like, is geared to getting consistent margin across the business, and we don't really see that difference. There's a slight suppression of margin in public sector because some tenders are very much price centric, but very modest. The next question. There's a couple of questions around acquisitions. Are acquisitions going to continue, given that we've spent quite a lot of money on Datrix, and therefore our gearing is slightly higher than we would like it to be, because we've identified a great business, and we're obviously paying the consideration for that business. And I think we're a very prudent board, so we don't go crazy in terms of leverage. We will bring that leverage down over the course of the next 12 months. So that'll make us very cautious in terms of acquisition. We will temper that until we've got that leverage down to a more a reduced number. So don't expect acquisitions in the short term. But nonetheless, if something crosses our path that we think is an awesome addition to the business, we'll find some way of doing it, I'm sure. There's a question about Christopher Kingsman, who's a major shareholder of the ADEPT business. Is he still a supportive shareholder? Well, our view, absolutely. There's a good relationship between Christopher and the board. There's a very much an open door. He's more than happy to engage with us. Our chairman, Ian, has regular conversations with Christopher that obviously that he's allowed to have. He's still a supportive shareholder, and happy to be part of the investor community. Next question I've got is what is the group's ESG strategy and how do you drive to carbon net zero? I think it's a really good question. It's such a hot topic. I personally sort of took charge of this over the summer and drafted our ESG strategy using the UN framework. There's a very elegant framework that you can use to sort of describe what you're doing in this space. We've started to take action. I think personally we should have acted on this earlier. I think it's very much in focus, but we're taking this very seriously now. We're going to put solar panels on the roof of our data center. We're replacing fluorescent lights with LED lights. That is an amazing saving, actually. If you do the maths on that, the payback on that investment in LED lights alone is 1.4 years. So there's absolute logic in doing those sort of very straightforward things. We're investigating putting electric car chargers at each of our locations. That's something that I think we'll end up doing over the course of the next 12 months. So a whole raft of different straightforward initiatives, and I'm doing that for two reasons. One, public sector tenders. Actually, it's three reasons. Public sector tenders are very much asking us to take that seriously and are scoring points on our responses to that. So there's a business imperative. There's a staff imperative in that there are members of my team who are asking us to take this seriously. So we've got some agitators, some positive agitators in the business, which I absolutely embrace. I really appreciate their passion and enthusiasm. So we'll seize the energy from those individuals. And the third imperative is a personal one. I think it's something we should take seriously. So we're going to do it and take it seriously. So yeah, three imperatives. I think we are taking it seriously. Look on the website. We've got our ESG strategy on that website with a 17-point plan that we're going to act upon. The next one, before I hand over to you, John, the share price fall suggests there's been a loss of confidence in the company. And this may be related to debt levels. What are you doing to address this? Well, I've talked about our debt piece. There is always that debate as to whether we should be taking on debt, acquiring companies and using those companies to expand the business. We believe as long as we look at the earnings per share, we look at the ability to pay down that debt, we look at the certainty of the revenues and the acquisitions that we make and how they contribute to our strategy, then if we look at all of those factors in the round, they're drivers as to whether we should or should not acquire businesses and take on additional debt. Debt is relatively cost effective as a way of expanding businesses, particularly given the returns that we make on the investments themselves. So we're still confident we've made the right decision and are making the right decisions, but we look at all those factors. So is that then affecting the share price? Is the second part of that question. I honestly don't know. The sellers that we've seen in the market and our brokers, I'm sure we'll be able to talk to this, so have a chat with the brokers, have largely been small value retail sellers, and institutions have actually been buying our shares. So I think it might be an optic piece. I'm not sure. It's a frustration for us as a business. I'd love to answer that question and put a straightforward remedy to it. Sadly, nothing obvious from the data that I'm being presented with. Okay, John, can I ask you to pick up some of the more financial questions?
Yeah, I'll pick up a couple here. So there's a question from Scott, which is about the money being spent on restructuring costs over the last 3 years and what the money's going on, and also when will they end. So yeah, restructuring. I mean, in the current year, it's not all restructuring. The number that's in there, we've got acquisition-related costs in this half year. There's 600,000 of acquisition-related costs for the financial due diligence, legal due diligence, legal fees in preparing documentation, and corporate finance fees. But we have got money being spent on restructuring, and that's primarily coming around through the restructuring of the group, and as we move to this to the One ADEPT. Several years ago, we were a collaboration of independent entities, and we've been going through that process of refining the group and reducing down the number of entities we've got, but also refining the structure of the employee team, which means that unfortunately we have had to let some people go as a result of consolidating roles. And so we have had some restructuring costs in there, and equally some restructuring costs for synergies from the acquisitions where we've been taking out duplicate roles. For example, finance and procurement are two good examples of that piece. The restructuring costs are pretty much done for this year, of what we see in the first half for the acquisition of Datrix, and also the acquisition fees are done. So when will they end? Well, they'll end at the point when we're no longer doing acquisitions and sort of restructuring the team for the One ADEPT project. So there's a question here about major contract wins. I think, Phil, you picked that one up during the actual presentation. Then we've got a question on Ebitda margins and the new areas, whether there's any improvement in Ebitda margin as a result of movement into the new areas. We have been continuing to invest in the managed service division. We've been continuing to invest in sales and marketing, particularly for that, to drive organic growth in that division. So whilst it's been delivering a higher gross margin, the net margin, the managed service division is only marginally higher than what it is in the fixed line piece. But equally, the managed service offering that we've got is a reasonably complicated service delivery in many instances, and we've been creating a platform to give us the scale to grow. So we have been investing in technical resource, professional services in particular, to give us the opportunity to grow that part of the business. And so we would expect that as we move into future periods, we'll be able to see some efficiency in terms of Ebitda margin, and we would expect to see some uplift in the percentages being delivered from that. I think this might be the last question, which is, can we explain the revenue churn rate? We've always we've never proactively published revenue churn rates because there's so many different definitions of how you would calculate a number on that piece. Equally, we have two quite distinct parts of the group which have very different churn rates within them. We have the fixed line piece, which, as we saw in the presentation, has reduced by 18% year on year, which we're not proactively selling into. So effectively, that's a gross churn rate that we're seeing in that fixed line piece at 18%. But that's being offset by net organic growth in the managed services part of 6%. So for us, it's about managing those two parts to get that managed service piece to grow to more than offset the fixed line piece, which it is starting to do. So we're expecting to see continued sustained organic growth at the top line and then in the profitability number.
Okay. I'm very conscious of time. We've got other questions, but I'm very conscious of time. So in terms of questions, I know on this platform, there's the ability to answer questions after this session. So we'll endeavour to do that, Mark, so that we give a complete set of answers if at all possible.
Absolutely, and just for the avoidance down, all those questions will be made available to you, and we'll notify all the investors on today's call when they're available for their review. Well, look, may I firstly thank all the investors for their questions today. There seems to be another question for every one you answer, so we could be here all day. But perhaps before I redirect investors to give you their thoughts and expectations, I know that feedback is important to you guys. Perhaps Phil, I could just ask you for a few closing comments just to wrap up with, and then I'll redirect investors to give you feedback.
Yeah, I mean, I hope you're encouraged by the results that we're sharing here. It's a function of a lot of work by a lot of people. We've got 340 skilled individuals in the group, and we very much focus on retaining and motivating those individuals. And to see results such as this as a result of that effort is very rewarding. I think we've made huge strides in terms of evolving the business. In terms of our operating platform, in terms of how we go to market, in terms of the stories we can tell to customers, and Datrix was a great decision, and we're seeing the benefit of that. So it feels like we're in a good place. We're not out of the COVID woods yet, but certainly optimism is starting to return, and we're seeing that in the pipeline. So I'm confident that the second half will deliver on management expectations, and look forward to communicating in due course about our progress. So yeah, thank you very much for attending the presentation. Ask any questions, and we'll try and respond as clearly as possible.
That's great. Phil, John, thank you once again for presenting to investors this afternoon. Can I please ask investors not to close this session, as we'll now automatically redirect you in order that you can provide your feedback to management in order that they can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ADEPT Technology, we'd like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.